A well-thought-out tax plan can be an important part of a retirement plan. Here to discuss some tax tips retirees should be aware of is Todd Wellnitz in Alameda, California. Todd, welcome.
Thank you, Scott.
So let's begin. Talk about, is there a planning strategy that's easy to fix right now for those people who are in retirement?
Yeah, it's crucial that folks in retirement reduce their taxable income as much as possible. Investments such as CDs, savings, brokerage accounts, oftentimes will generate unnecessary income. What most people don't realize is the more income that you receive, the higher your taxes are on your Social Security. So one thing that we recommend is reducing that income as much as possible. Give yourself a raise. Give yourself a chance to pay less in Social Security. It's almost like free money, Scott.
And again, for those people in retirement who want to develop a strong tax strategy, what are some things they should be aware of?
I would definitely seek out a retirement planner that is going to have a good partnership with a CPA or a tax advisor. It's important that the CPA and the retirement advisor work together so that they can review your assets and determine what the best tax strategy is for you. The individuals that are the retirement advisor as well as a tax specialist will look at your personal exemptions, your standard deductions, and what they may find is if they're high enough, you can actually start taking more income from your retirement accounts now. And by doing that, what you'll do is ultimately reduce the future income that you may be forced to take on these retirement accounts. It's very important.
Can you talk about the taxation of the different retirement plans?
Most retirement accounts are taxed, they're actually tax deferred. So what that means is the growth in the account is not taxed until the income begins. So for example, your IRAs, your 401ks, and annuities are tax-deferred vehicles. Once the income begins, that's when they are taxed at your ordinary income level. Roth IRA is actually a great option for folks that would like to have tax-free growth in the future.
Well, Todd, tax-free sounds like a great tax planning strategy. How can more retirees take advantage of that?
A Roth conversion is a very effective tool for building an account that would be tax-free in the future. All we do is we take a traditional IRA, we will convert that to a Roth IRA. It's a very simple process. However, you definitely would want to involve a tax specialist to make sure it's the right tool for yourself. We do this very often, and what happens is ultimately that money is going to be growing tax-free, and the income in the future will also be tax-free.
So what determines if a Roth conversion is a good idea?
Good question, Scott. One of the first things that we do is we look at how many more years does this individual have before they choose to retire. And it's also critical to understand that that tax up front on the conversion will need to come from another account that's not a retirement account. So for example, maybe a CD, a savings account, maybe a brokerage account. So we want to make sure that the individual has the asset or the account in order to pay that amount up front. However, for individuals that would like to have tax-free growth and tax-free income, this is a very, very strong strategy.
All right, Todd, thank you.
Thank you, Scott.
My guest has been Todd Wellnitz in Alameda, California, and you're watching Annuity News Now.